Welcome to the Trading Club 7U community. I'm your lead educator. Today we're going to dive deeper into a crucial topic in technical analysis that even experienced traders often misunderstand. Are you ready to clear up some of the confusion around chart patterns? As a beginner, you've likely come across charts with various shapes and patterns. You might have seen arrows pointing up or down, lines drawing zigzags, or circles surrounding price movements. But do you know what these patterns really mean, and how they can help you make informed trading decisions? Let's break down some of the most common chart patterns that beginners misunderstand, starting with the head and shoulders. The head and shoulders pattern is a bearish reversal pattern that forms when the price makes a high, then a double peak, and finally a lower high. Think of it like a wave that crashes before making a final retreat. Let's use simple numbers to illustrate this. Imagine the price of a stock hits 50, then falls back to 48 before rising again to 52. But then, instead of reaching 54, it only gets to 49. That's a head and shoulders pattern forming. This can be a sign that the current uptrend is losing steam, and it's time to reconsider your long position. Now, let's talk about some common mistakes beginners make when looking at head and shoulders patterns. One of the biggest mistakes is overanalyzing these patterns, or looking for them everywhere. Remember, chart patterns are just one tool in your trading arsenal. Don't get caught up in the excitement of spotting a possible pattern. Instead, use them to confirm your existing analysis. Another mistake beginners make is not paying attention to the overall context of the market. A head and shoulders pattern can occur after a strong uptrend, but it can also form after a decline, or even a sideways trading range. That's why it's essential to use your discretion and analyze the pattern within the context of overall market conditions. Another chart pattern that beginners often misunderstand is the double top. This one's easy to spot, it's just two peaks with a trough in between. However, the mistake most beginners make is thinking that a double top always forms after a strong uptrend. But this isn't always the case. Double tops can occur after a decline, an uptrend, or even a sideways trading range. Use your discretion and analyze the pattern within the context of overall market conditions. Now, let's talk about the inverse head and shoulders pattern, which is essentially the opposite of the head and shoulders pattern. This pattern forms when the price makes a low, then a double trough, and finally a higher low. Think of it like a wave that recovers before making a final push higher. One of the key things to remember when looking at chart patterns is to use multiple time frames to confirm the pattern. This means analyzing the pattern on different time charts, such as the 4-hour, daily, and weekly charts. By looking at the pattern on different time frames, you can get a better sense of the overall direction of the price and make more informed trading decisions. For your practical exercise, I want you to identify a head and shoulders pattern on a demo chart or in your paper trading journal. Pay attention to the three components: the left shoulder, the head, and the right shoulder. Once you have identified a possible head and shoulders pattern, analyze the overall direction of the price and consider what it means for your trading strategy. To take it to the next level, let's do a quick review of some key concepts. What are some common mistakes beginners make when looking at chart patterns? Overanalyzing, looking for patterns everywhere, and not paying attention to the overall context of the market. What are some key things to remember when looking at chart patterns? Use multiple time frames to confirm the pattern, and analyze the pattern within the context of overall market conditions. For homework, I want you to record a head and shoulders pattern on a demo chart or in your paper trading journal. And then, I want you to draw an inverse head and shoulders pattern on the same chart. This will give you a better sense of how these patterns work and how you can use them to inform your trading decisions. Remember, technical analysis is not foolproof, and trading always carries risk. Don't risk capital without thoroughly testing your strategy on a demo account or paper trading journal. Thanks for joining me today, and I'll see you in the next lesson. Before we conclude, if you're interested in learning more about how to identify and utilize chart patterns effectively, I recommend checking out our previous lessons on technical tools, available on our YouTube channel. And if you're new here, make sure to subscribe to our channel for more premium trading lessons.